No, I think that's very much true. I mean, if you're a large cap mutual fund and you own a company that's got a $15 billion market cap, and it meets all your prospectus's criteria that you've laid out, I'm going to invest in these types of companies, and that company happens to distribute shares in a subsidiary that's 1/10 the size, yeah, you probably have no choice but to sell that, right? I mean, and if you're an income fund and you're managing a portfolio for yield, and you're promising your investors saying, I'm going to generate current yield for you, and then a bond goes non-current, it's not paying its coupon anymore, yeah, you probably have no choice but to sell that. So it's not to be critical of them per se, but they're also, I mean, I think even more than that is that the behavioral mistakes kick in on top of that. So you really have both things working against the issue at the same time. So you have the people that have a structural or institutional imperative to sell this issue for whatever reason, and then you have a lot of people that also just say, forget about it, because the natural supply of buyers in these situations tends to be much, much smaller. So you have the big companies that are spinning off a small one, and all the mutual funds are selling because they can't hold it or whatever. But then you also have the mom and pop investors that had 1,000 shares of this one company that they liked and bought on purpose, and now they have 100 shares of this other little company that they don't know and don't care about, and they're not going to take the time to read the Form 10. Okay, sell, goodbye. It's 100 shares, it's not that big a deal, but all that stuff adds up. So yeah, I think it's just being aware of the fact that you have these factors at work, and that you have the institutional imperative, which may very well be rational, like you said, to your point. It's not to be critical of them. I mean, it speaks to the power of, if you're able to constructing a broad mandate so that you're never in the position of having to be a forced seller yourself, but obviously that's not how the world works. The vast majority of capital out there is pretty narrowly siloed into a specific, asset class or style box or whatever, such that that's how they work. And it may not be the ideal investment decision, but it's certainly rational because they have to do it. They have no choice. They want to keep their job or what, But yeah, the point is that they're making a decision that's separate from, okay, I'm sitting here with a chunk of capital to deploy. What's the best place to put it? What's the best investment decision to make? What's the most rational outcome? If I have $1 today, I want to get at least $1 plus a return back in the future. What's the best thing I could make? And obviously that's not necessarily related to selling a bond just because it's defaulted. It's already defaulted. You've already made the mistake. You've already had the problem created. So what's the best path forward from here?